Alright, quick update on Kadena. So if we hop into the lower time frames before we come over to the daily, you can see that this recently fired a sell signal on the 4-hourly EMA ribbons when we were around about $7. We've come down, retested the 4-hourly EMAs twice now, and we are now rolling down. So while the EMA ribbons are telling us we're going to have a move to the downside, the squeeze mon momentum indicator is kind of resetting the bearish momentum right now. So, I mean, it could even be likely that we could have a push up, a fake out even to as high as 669 again to come into the long-term moving average before having a move back down to sweep the lows. Now, in my last video for Kadena, I highlighted, we are in this uptrend, and the second we kind of start putting daily closes below 645, I would kind of have to assume that, we're at least coming down to the 786, but more likely, I think, is we're coming down to sweep the lows and potentially having a quick fake out below the 786 Fibonacci at 569. So I've been talking about this. Once we had a breakdown, I've been saying I think that a 31% trade to the downside is going to be soon following. We've really only come down about 4%, but what gets interesting, we're now on the daily, is we've really seen that these EMA ribbons, these have been a very telltale sign every time we top out. Every time on the daily EMA ribbons that we have a fire above the short-term moving average, we basically know that we're soon about to come down and have a nasty drop. Now, we've done this while putting in higher lows, but we've also been putting in lower highs in this. It's both a triangle formation, an ascending support formation, but nonetheless, you've got this triangle pattern. I'm not going to take the price target of it, but we've broken to the downside, and this is a daily pattern in my opinion. We've broken to the downside on the daily, and because of this, looking at the squeeze momentum indicator, we've now had enough bearish momentum to push us into the light red, meaning that the bearish momentum has reset, and now we have a lot more room to move to the downside. So I honestly don't think that a move down to 569, which is an 11% drop, is going to quench the bloodthirst of the bears right now. I think that a move down to $4.40, which is this 32% drop that we've been talking about, is most likely. And the main reason why I believe that is because I'm not going to get into every reason why, but Bitcoin's been rejected on the daily EMA ribbons. We're really having a hard time fighting with this 42.5, and in my opinion, there's a lot of confluence that could bring Bitcoin down to 40,000. Also, the squeeze mom daily momentum indicator has fired short red as well. So I think that Bitcoin could potentially having a fake out, and I honestly don't see a world where Bitcoin comes down 7% and Kadena only comes down 11%. So I'd really have to assume Kadena is coming down to sweep the lows. Potentially it might not reach my price target. It could have a fake out to maybe the candle body close around about $5. But nonetheless, I am of the opinion that in the short term, this 786 Fibonacci isn't going to hold. We've already lost it once. I'd have to assume that this is not the biggest area of support, and we are going to head below it. I mean, the uptrend, the short-term uptrend, has been invalidated. You can also kind of call this like a bear flag going on right now. I mean, whether you draw it from here to here, they are both very valid, even though we had the fake out over the top of it. I'm not going to be taking the price target of this because for the very simple reason I don't think the price target will hit. I have no idea what the price target will even be, but I imagine it'd be close to zero or the minuses. So yeah, I mean, it's literally in the minuses, so I really don't want to focus too much on the price target of this bear flag. Yeah, they're both in the minuses, but nonetheless, the market structure where we've got this ascending channel, even if we don't draw the pole, whether you want to call it, an ascending triangle, a bear flag, a bearish pennant, there's numerous ways you can draw it. The point of the matter is, the bottom line here, the support has now been flipped as resistance. We've back tested it. We've back tested the daily EMA ribbons, and the squeeze mom daily is starting to head down. So even though we don't have volume coming in right now, I have to assume that at some point soon we're going to see an increase in volume picking up to the downside. Once again, 4-hourly squeeze mom has now, basically reset. So if we see a further push down, I definitely see the momentum carrying us down to as potentially low as 442. But really, as long as we hold 569 from a technical perspective, then we are still macro bullish. But in my opinion, my gut feeling is we are going to be coming down to here. But keep that in mind, keep that with a grain of salt. As long as we don't break below this 566, 786 Fibonacci region, then, you know, technically there's not too much to fear about. But my gut is telling me that Bitcoin is getting ready for a flush out to the downside. And that is also kind of telling me that the momentum is going to have enough, you know, force to pick up and have a snowball effect where it does roll all the way down to these previous lows. So I'm still expecting this. This is currently about a 28% drop. That is really all I see for Kadena until we start having, you know, more macro bottoming signals. Then I really can't be too bullish for Kadena right now. So that is all I see for it. Once again, none of this is financial advice, just my opinion on the market. And you've always got to do what's best for you. Cowboy out. Peace.